Stop what you're doing. Seriously. Whatever else you were about to do right now, put it on hold. Because in the next few minutes, I'm going to show you something that the mainstream financial media is completely ignoring. Something that the panic sellers have no idea is happening, and something that, if you understand it, could be the difference between looking back at this moment as the biggest mistake of your financial life or the best decision you ever made. And I want you to really hear that, not as hype, not as clickbait, but as a straight up warning from someone who has been through enough cycles in this market to recognize what's happening right now. Because right now, today, this week, this exact moment, there are two completely different versions of the Bitcoin story playing out simultaneously. And depending on which version you're paying attention to, you're either terrified or you're loading up. Let me tell you about both. Version 1 is the story you've been fed by the headlines. Bitcoin is down 42% from its all-time high of $126,000. We've had 5 consecutive red monthly candles, the worst streak since 2018. The fear and greed index is sitting at 22 out of 100, deep in extreme fear territory. Reddit is a disaster zone. Twitter is full of people either gloating that they called the crash or spiraling into genuine panic about whether this is all over. That's version 1. And I get it. It looks rough. It feels rough. If you're holding right now, there's a very specific kind of stomach pain that comes with watching your portfolio bleed for weeks on end. I know that feeling personally. I've lived it more times than I'd like to admit. But here's version 2. The version that isn't making headlines, the version that you almost have to go looking for, buried in on-chain data and exchange flow reports and institutional filing documents that most people never bother to read. In the last 30 days, whale wallets holding massive amounts of Bitcoin, wallets belonging to the kind of people who don't make emotional decisions, wallets that move markets, those wallets have accumulated 270,000 Bitcoin, 270,000. At today's prices, that's somewhere in the neighborhood of $19 billion worth of Bitcoin. Quietly, methodically, moved off exchanges and into cold storage. Gone from circulation, locked away. Not for selling, for holding. That's the largest net whale accumulation in 13 years. And they did it while the fear and greed index was screaming extreme fear, while retail investors were panic selling, while the headlines were calling for the end of the Bitcoin experiment. So let me ask you a very direct question. When was the last time the big money was this wrong about the big picture? I'm going to walk you through exactly what the data is showing, why I think this moment is more significant than most people realize, what could happen next, and what I'd be watching like a hawk if I were still actively trading. I want you to have the full picture, the real picture, not the one designed to get clicks by making you scared. So stay with me, because the thing I'm saving for the back half of this video, the thing developing right now behind the scenes that almost nobody is covering, that part might genuinely change how you think about what comes next for Bitcoin this year. Now, before I go any further, I have to be straight with you because this is important and I take it seriously. I am not a financial advisor. I'm not your broker. I'm not here to tell you what to do with your money. What I am is someone who has spent years living and breathing this market, someone who has made money, lost money, learned brutal lessons, and come out the other side with a much clearer understanding of how this game actually works. Everything I share in this video is for educational and informational purposes only. Your money is your responsibility. Your decisions are your decisions. I share what the data shows me, what patterns I recognize from experience, and what I think a clear-headed, informed perspective looks like when the market gets chaotic. But only you know your financial situation, your risk tolerance, and what's right for you. Always do your own research. And if you're making significant decisions, talk to a licensed professional. We clear? Good. Because what I'm about to walk you through is worth paying close attention to. Let me set the scene properly, because context is everything in this market, and without it, data is just noise. It's early March 2026. Bitcoin is hovering around $71,000. And to anyone looking at just the price and just the recent headlines, the picture looks grim. 42% below the all-time high, 5 months of selling, the kind of prolonged bleed that tests even the most convicted long-term holders. Now here's where I need you to do something for me. I need you to mentally step back from the price for a second. Stop looking at the number, because the number, right now in this particular moment, was the least interesting part of the story. I've been through enough of these cycles to know that the price is always the last thing to reflect what's actually happening underneath. The real action, the action that matters, the action that tells you where things are going before the price tells you, that happens on-chain, in the data, in the flows, in the behavior of wallets that have enough capital to think in decades instead of days. And I want to take you back to a few moments in Bitcoin's history because the parallels are striking and they matter. March 2020, COVID hits, markets collapse overnight. Bitcoin, which had been trading near $10,000, crashed to below $4,000 in literally 48 hours. It was violent. It was terrifying. People who had been in the market for years were questioning everything. The headlines were merciless. Bitcoin has failed as a safe haven. Crypto is dead. The experiment is over. I remember that moment clearly. The feeling in the community was genuinely bleak. And then 18 months later, Bitcoin hit $69,000. Every single dollar invested at $4,000 during that panic turned into more than $17. People who bought when it felt most dangerous made life-changing returns. People who sold at the bottom, who let the fear win, watched that happen from the sidelines. Or go back further. December 2018. Bitcoin had crashed from nearly $20,000 all the way down to $3,500. 14 months of relentless decline. The sentiment was apocalyptic. The term crypto winter was everywhere. And yet, from that exact low, Bitcoin eventually climbed to $69,000. The people who understood the cycle, who held through the darkness, who even bought when it felt suicidal to do so, those people changed their financial trajectories permanently. Now, I'm not standing here promising that history repeats exactly. It never does exactly. Every cycle has its own character, its own catalyst, its own timeline. But the human psychology that drives these markets, that part is eerily, uncomfortably consistent. And right now, the psychological setup, the extreme fear, the capitulation headlines, the retail selling, looks remarkably similar to those prior inflection points. Uncomfortably similar. And here's where it gets genuinely interesting. Here's the thing that had me staring at my screen for 2 solid hours this week, pulling data and cross-referencing signals. It's not just one indicator flashing. It's not just one data point that caught my eye. It's everything pointing in the same direction at the same time. Let me walk you through what I found, piece by piece, and I want you to feel the weight of what these signals mean together, because individually they're notable but stacked on top of each other. They tell a very specific story. Start with the RSI. And look, I know that sounds like technical chart jargon, so let me make this as simple as I possibly can, because this is too important to lose people on the terminology. Think about a rubber band. You grab both ends and you stretch it downward. The further you stretch it, the more tension builds, and at some point, physics demands it snaps back. The further the stretch, the more violent the snap. Bitcoin's weekly RSI is essentially measuring that stretch on the selling pressure. How far has the selling pulled the market down relative to its historical range? And right now, the weekly RSI just hit 27. 27. In Bitcoin's entire existence, over more than a decade of price history, the weekly RSI has only dipped this low 2 times. The first was January 2015, when Bitcoin was sitting around $200. You know what happened after that? Bitcoin eventually climbed to $20,000. The second was December 2018, in the bottom of the brutal crypto winter, when Bitcoin was around $3,500. What followed? Bitcoin went to $69,000. We are now sitting at the third time in Bitcoin's history that this signal has appeared. The third time that rubber band has been stretched this far. I'm not telling you this means Bitcoin goes straight up from here. Markets are messy, and they don't owe anyone a clean outcome. But I am telling you this is not a signal that serious market students ignore. This is the kind of signal you study, the kind you remember, the kind that years later people point to and say, that was the moment. Now combine that with what's happening on exchanges, and this is where the story gets even more striking. Bitcoin exchange reserves, the amount of Bitcoin sitting on trading platforms available to be sold, just hit their lowest level since 2018. Only 2.31 million Bitcoin remain on exchanges right now. 6-year lows. Think about what that actually means in practical terms. Exchanges are like the supply shelf at a store. When supply on the shelf is low, prices rise when demand returns, because there's nothing there to absorb the buying. Less Bitcoin available to sell means a potential supply squeeze when buyers start coming back in. And where is that Bitcoin going? Off exchanges, into cold wallets, into long-term storage. 13,500 Bitcoin were pulled off Binance alone since February 21st. Not moved to another exchange, moved into personal wallets, into vaults, into the digital equivalent of burying gold in the backyard. That is not the behavior of someone preparing to sell. That is the behavior of someone who looked at the price, decided it was an opportunity, and acted decisively. And when you layer in the whale data on top of this, the fact that the largest wallets in this market made their single largest net accumulation in 13 years during this exact period of peak fear, the picture becomes very hard to dismiss. Now here's where most people stop connecting the dots, because the next piece of this puzzle is the one that genuinely surprised me. The Bitcoin ETF story right now looks ugly on the surface. If you just glanced at the daily ETF flow numbers, you'd see outflows. You'd see BlackRock's IBIT showing money leaving. You'd see Fidelity's FBTC bleeding, and you'd think, okay, even the institutions are bailing, even the smart money is running, but that's not the full story, not even close. Because when you look at the weekly ETF picture, when you zoom out just far enough to see the whole frame, Bitcoin spot ETFs recorded $1.7 billion in net inflows this week. $1.7 billion in a week where Bitcoin was dropping. In a week where the fear and greed index was deep in extreme fear. In a week where retail investors were hitting the sell button as fast as they could find it. The institutions didn't run. They used the dip as a shopping cart. And then there's Michael Saylor. Strategy, the company formerly known as MicroStrategy, just filed with the SEC showing a fresh purchase of 3,015 Bitcoin, $204 million worth. This week, here's the part that makes this genuinely remarkable. Their average cost basis, the average price they've paid for all their Bitcoin over the years, is $75,985. They just bought at $67,700. That means they're currently sitting on a $7 billion unrealized loss, and they still bought more. Now, you can debate the wisdom of that approach. You can question the strategy. But what you cannot honestly argue is that these are scared people. These are not people who think this is over. These are people who have done the kind of deep institutional grade analysis that most retail investors never have access to, and concluded that at these prices, Bitcoin is worth accumulating even at a loss to their average. When institutions absorb billions in weekly ETF inflows during peak fear, when the corporate world's most committed Bitcoin bull doubles down through $1 billion paper loss, when whales make their largest buy in 13 years. Who exactly is selling into all of that? Retail investors. Scared retail investors. Reading scary headlines. Making emotional decisions. Think about that honestly for a moment, because the question of which side of that trade you want to be on is the most important question this video can ask you. Now, if you're someone who wants to see moves like this forming before they happen, if you want to understand the signals while most people are still reacting to the noise, just make sure you're plugged in for what comes next, because the data I'm going to share in my next video makes today's setup look like a warm-up act. You'll want to be here for that one. Now, here's the part where I have to be honest with you in the other direction, because I'm not here to paint a picture that's only one color. The fear in this market is real. It's not manufactured. It's not irrational. 22 consecutive days with the fear and greed index below 25, 5 months of red candles, Bitcoin down 42% from a high that just 5 months ago had people talking about $200,000 price targets. That pain is real. And if you're holding right now and you're feeling it, I get it. Completely. I've sat in that exact chair. I've watched portfolios bleed for months. I've felt the specific anxiety that comes at 2 a.m. when you're second-guessing every decision you've made. In 2018, I watched a significant chunk of my holdings lose 80% of their value over 12 months. Not because I didn't understand Bitcoin, not because I hadn't done my research, but because bear markets are a psychological endurance test disguised as a financial one. The market is specifically designed, not by conspiracy but by pure mechanics, to find your breaking point and push past it, to shake out everyone who doesn't have an unshakable conviction in what they're holding. And here's the brutal truth about that shaking out process. It's happening right now, right this minute. And the people who are being shaken out are selling their Bitcoin directly into the hands of the people with the deepest conviction and the longest time horizons. But I also want to honor the bear case, because ignoring it would be dishonest. The miner data is actually improving. Net miner selling has collapsed from about 4,700 Bitcoin per day at the peak of fear down to under 900. That's significant. It means even the miners, who have the highest operational costs and the most urgent need for cash flow, are pulling back from selling pressure. Bitcoin's hash rate, the measure of computational power securing the network, remains near all-time highs. The fundamental infrastructure of Bitcoin has never been stronger. And yet, the macro environment remains uncertain. Bitcoin's 30-day correlation with the S&P 500 is running around 0.55. That's not trivial. It means that if equity markets catch a cold, Bitcoin catches it too. A genuine macro shock, a geopolitical escalation, an unexpected Federal Reserve decision, a systemic financial event, could pressure Bitcoin lower, regardless of what the on-chain data is signaling. The downside levels you need to know. If $65,000 gives way on a sustained weekly close, the next meaningful support zones are around 56,000, 52,000, and potentially as low as 47 to 48,000. Those aren't numbers I enjoy sharing, but you need to have them in your head, because informed preparation beats emotional reaction every single time. And again, because I genuinely mean this, I am not telling you what to do with your money. I'm sharing what the data shows and what experience has taught me about reading this market. Your financial situation, your risk tolerance, your timeline, those are yours. If you're uncertain, talk to someone qualified. Never put yourself in a position where a bad outcome in the market destroys your life outside the market. I've seen that happen. It's preventable. Please keep it that way. Now let me give you the roadmap, the scenarios, the things I'd be watching if I still had active positions, because I think the most valuable thing I can give you isn't a price prediction. Predictions are entertainment. What I can give you is a framework that helps you respond instead of react when the market moves. The bullish case starts with one critical requirement. Bitcoin needs to hold $65,000. That's the floor. That's the structural foundation. If that holds, the first major test is the $72,000 level, which is almost exactly where we're sitting right now as I record this. Think of it as the ceiling of the current range. The market is staring at it, pressing against it. A clean weekly close above 72,000 changes the narrative almost overnight. From there, the next target cluster is 79 to 80,000, and above 80,000. Several analysts with strong track records on this cycle have maintained price targets in the $110,000 to $120,000 range for 2026. What catalyzes that move? Continued institutional inflows, a macro pivot from the Federal Reserve, which historically sends money rushing into risk assets, or simply the organic mechanics of low exchange supply meeting returning demand. In this scenario, the patient holders look like geniuses. The bearish case is simpler but more uncomfortable. Lose $65,000 on a sustained basis and things get complicated fast. The 56, 52, 47,000 levels become the conversation. What triggers it? A macro shock? A regulatory broadside? Or just capitulation that overwhelms even the whale accumulation we've documented? This scenario doesn't mean Bitcoin is finished, but it means this particular moment wasn't the bottom and your patience gets tested further. And then there's the scenario almost nobody is talking about. And then honestly, this is the one that keeps me up at night in the best possible way. What if it's already starting? What if right now, while the headlines are still screaming doom, the bottom is already in? In March 2020, Bitcoin's recovery from the COVID crash happened so fast that most people didn't realize it was happening until Bitcoin had already doubled off the low. People were still debating whether $4,000 was the bottom while Bitcoin was running straight to $12,000. By the time the headlines turned positive, the best entry points were already gone. Every accumulation signal is active right now. Exchange reserves at 6-year lows. Whale buying at 13-year highs. Miner selling pressure collapsed. ETF weekly inflows strong. RSI at a historically rare oversold level seen only twice before in Bitcoin's entire existence. What if the move has already started and most people are still too scared to see it? The market doesn't wait for consensus. It doesn't wait for the headlines to turn positive. It doesn't wait for the fear and greed index to hit neutral. It moves when it moves. And then retail investors chase it and pay a premium and wonder why they always seem to buy after the move instead of before it. You know what's interesting about the people who watch this channel consistently? They tell me in the comments that they feel more prepared. Not always right, not always perfect, but prepared. They had the context for the rally to 126,000. They understood the framework when the pullback started. They weren't panicking because they understood what the signals were saying. That's not some special gift. That's just preparation. That's what happens when you stay informed with data instead of reacting to narratives. If that kind of edge matters to you, if being prepared instead of perpetually surprised sounds like something you want, then you already know what to do. Stay plugged in. Be here for the next one. Let me close with something I want you to really sit with. Remember how I opened this video? Two groups of people existing simultaneously in this market right now. Group one is loud. They're posting their fear. They're sharing their panic. They're selling into the market and calling it wisdom. Group two is quiet. They're not on Reddit. They're not tweeting. They're not in YouTube comment sections. They're in spreadsheets. They're reading on-chain data. They're moving Bitcoin off exchanges into cold storage. They're placing strategic purchases and then closing their laptops and going about their lives. The thing that separates these two groups isn't access to better information. Most of this data is publicly available. The thing that separates them is their relationship with discomfort. Group 2 has trained themselves, usually through painful experience, to act on data when everything emotional screams at them to stop. To buy when buying feels terrifying, to hold when holding feels like stupidity, to take the long view when the short-term picture looks awful. And here's the final thing I want to leave you with today. The thing I haven't gotten to yet, and I promised you I was saving something. Everything we've discussed today is the present story. The accumulation, the RSI signal, the ETF flows, the exchange reserves, that's what's happening now. But there's a future story developing in Washington that very few content creators are covering in any depth. Specific Bitcoin-related legislation, federal-level strategic reserve discussions, policy movement that, if it materializes the way it appears to be heading, would represent a structural change in how the United States government views, holds, and interacts with Bitcoin, the likes of which we have never seen, not rumor, not speculation, actual policy movement happening in real time. And when that story becomes fully public, when the market finally prices in what's quietly being built in the background, everything we talked about today is going to look like the opening act. I'm going deep on that in my next video, with sources, with specifics, with the full implications for U.S. investors, U.S. taxpayers, and anyone holding Bitcoin in this country. The market doesn't care how you feel. It doesn't care how scared you are. It doesn't care whether you panic sold at the bottom or held with conviction. It just moves, and then it rewards whoever was positioned correctly. I make these videos because I wish someone had given me this kind of straight talk when I was starting out. I learned the hard way. You don't have to. And I'm going to keep making these videos because this community deserves information that actually helps them think clearly, not content designed to maximize their fear or their FOMO. If this video gave you even one moment of clarity in what feels like a confusing and scary market right now, if it shifted your perspective even slightly, then do yourself one favor, not for me, for yourself. Hit that notification bell, because when the next major signal fires, and based on everything I just showed you, that moment may be closer than anyone is comfortable admitting. I want you to be first, not reading about it after the move, not chasing it, first. Now here's what I want from you, not a generic comment, something real. Right now, at $71,000 with everything we just walked through, where do you stand? Drop one of 4 words in the comments below. Buying, holding, waiting, sold. That's it. 1 word. And then tell me your price target for Bitcoin by the end of 2026. Because I read every single comment and I'm going to pin the prediction that I think is most thoughtful and most well-reasoned. Let's actually map the sentiment of the people who watch this channel, the people who are informed, who understand the data, who are thinking instead of reacting. My next video covers something that I genuinely have not seen any major Bitcoin channel tackle properly yet. And when this particular story breaks into the mainstream, you're going to remember you heard it here first. Stay sharp, stay ahead. And I'll see you in the next one. Peace.